Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician. Thank you, as always, for clicking on this link here and giving us a few minutes of your time, where we're going to go over some of the topics we thought would be valuable to share with you that we covered in this week's investment meeting. First, we're going to take a look at productivity and some of the catalysts that have helped propel the economy here as of late. And Andrew's going to do a deep dive into uranium and some of the catalysts that we have seen in that area. So we'll start first with some background on productivity. So economic growth comes from two sources, and two sources only. The first would be population growth or employment growth, and the second is from productivity. Now, a lot of different things can lead to productivity, but that is the amount of additional output that you get per worker. So if you get the same worker doing producing more widgets or whatever it is, that is increased productivity. And that has been the secret sauce, the major tool that has allowed us so far to skirt recession. Last year, if you'll recall, was one of the most widely forecasted recessions in history, and it never came. And one of the reasons we were able to get around that was that we just had more and more productive workers. And there's several reasons behind that. One we can point to is the big tech companies spending $400 billion a year in capital expenditures. Just for some reference point there, they were just spending at $100 billion 5 years ago. So that big investment into technology has allowed workers to be more productive. Of course, AI has played a role in that in many different ways. Many of you, I'm sure, have went into a restaurant and noticed you check yourself out as opposed to a service person there, both ringing you up and getting your food. Those are all good things. Last and a major one, not to be overlooked, is entrepreneurship. Small businesses are usually more productive than big businesses. And starting with the COVID era, we had a big boom in applications for new businesses, and that surge has not receded after COVID. In fact, it has stayed red hot, and we have seen more and more and more small businesses. And we believe that is one of the factors that has led to a more productive economy and one that has allowed us to grow beyond what we thought was going to be the case just a couple of years ago. So as always, for those of you who like history, especially economic history, you would know that productivity seems to be the thing that's always there to surprise us, going all the way back to one of the first economists, Malthus, who projected that we would grow the population beyond our means to feed based on agricultural productivity. But as always, technology just came and surpassed his imagination and all of ours by meeting that challenge and then some. So that's the economic side. I'll pass it over to Andrew for a look at uranium.
Thank you, Adam. So now we're going to take a little bit of a shift. A lot of the market covers I've been looking at the broad market. Today, we're going to look at actually one of the investments that we have in several of our models. And why it's important to discuss right now is because this is a topic that's also hitting kind of the mainstream news as well. And that topic is uranium. Not really a common commodity that probably is discussed at your average dining table. It's not like corn, wheat, or soybeans or gas prices. But uranium is still very, very important as it provides a lot of energy sources for a lot of big parts of the global economy. This is a topic that we started getting into when in Europe they're having an energy crisis. They were really running out of power, and part of the reason for that was a lot of countries began to shut down their nuclear power plants. During that energy crisis, they began to realize, hey, maybe we actually still need some of this old form of energy production before we start relying too heavily on things like solar, wind, and other more sustainable sources of energy. And so we started seeing European countries move back towards nuclear power. We're actually seeing the same thing in the US as well. We're starting to see a little bit of more interest now in nuclear power. And so we started seeing the increase in demand for products like uranium. And we're always interested when we're looking for new investments, new opportunities, is looking from a fundamental type lens to where we're looking at the supply and demand of a product, whether it's an iPhone, whether it's a piece of farming equipment or banking service. Different industries have different products. Or we start looking at it from a technical lens. That's where I spend a lot of my time. Do we have good price support? Do we see the market really starting to show a lot of buyers coming into a market that's going to push the price of a stock higher? It's even better when we can start combining the two. So recently, we started seeing the increase in demand for uranium as more nuclear power was being sought after. And now we're starting to see from both a supply standpoint. You might have seen a recent headline that the US just passed a ban on Russian uranium imports. As we continue to see the conflict go on with Ukraine and Russia, part of the we've started to ban things like oil or set oil price caps on what comes out of Russia. Now we're starting to see the same thing for uranium, banning beginning in 90 days the production or the import of Russian uranium. So now we're starting to see the diminishing amount of supply as Russia produces quite a bit of uranium, and that's going to have an impact on the price on the supply side for the product. And so this all together begins to really support and add to a thesis that we can discuss as an investment team to where we believe in attractiveness and the opportunity for uranium prices. And we're starting to see that play out in the URNM, which is on your screen now, the ETF that we're able to get exposure to that. And we can see it's actually risen over 30% from when it had bottomed back in March and is now starting to break out to new highs as a lot of the US producers are actually seeing really a strong benefit on the back of this latest news on that Russian uranium ban. And so this is just an example of some of the process that we go through, kind of very surface level, very quick, where we try to combine, where we have a catalyst, like a headline like that, where we start seeing supply demand dynamics look favorable. And then when we start seeing the chart also supportive, where we see the market reflecting a lot of supply, a lot of demand, possibly for an ETF or for a commodity or an individual stock. When we're able to put all these puzzle pieces together, it gives us a lot more support and a little bit more clarity into the potential for an investment to appreciate in value. And then we obviously want to then manage the risk and manage the exposure as we go. But we like to look where we're able to put multiple things together like this as we seek new opportunities and new investments for FEG families.
Well done there, and a good job of really trying to lay a foundation for how we think about and how we analyze and make investment decisions, something we get from you guys from time to time. So thank you, Andrew. Thank you to all of you who gave us your time. As always, we'll give you a reminder. If we can be of service, please give us a call, 800-928-4001, or scan the QR code and book it electronically. Thanks again, and have a great Memorial Day weekend.